Welcome to Tenor Tech, where I solve the problems you didn't even know you had.
You already have Zerodha. Grant options permission and fund your account with a small, defined percentage of capital, like 2%. Once done, pick a clear, simple strategy, long call or long put to learn directional moves, or covered call if you want income and risk reduction. You should set strike selection rules. Pick near the money within 1-3 expiry cycles and plan position size. Make sure to enable real-time market data. It speeds execution and avoids slippage. You now scan for liquid contracts, high open interest, narrow bid-ask spreads, and an actively traded underlying. This reduces execution friction and unexpected gaps. Once you find a contract, pick expiry 1 to 3 weeks out to balance time decay and momentum. Place limit orders to control fills, then set stop loss and profit target. Size every trade so a stop hit equals your predefined risk. Also, use the ticket notes in Kite to record rationale. It trains disciplined decisions. You finish trades by closing before expiry if targets or stop losses are met, because assignment and weekend risk complicate outcomes. Once closed, review your trade log weekly. Note entry, exit, size, and the lesson learned so you improve. If things go wrong, for example, your limit won't fill or orders remain pending, widen the limit slightly or use immediate or cancel. Confirm you have required margin and that the contract isn't halted. Finally, iterate rules based on real results.
Thanks for watching. Subscribe to keep your life in tune.